With so many homeowners locked into long-term super low interest rates and rental prices booming, more people than ever are trying to make the decision between whether or not to rent or sell their primary residence that they're moving out of. This week, we'll dig into some tips and questions to ask yourself if you're in that position. Do not forget about the capital gains exemption. You can exempt yourself from paying taxes on up to $250,000 of gains if you're filing as a single, and up to $500,000 of gains if you're filing jointly with your spouse. The main requirement is that you had to have lived in the property as your primary residence for 2 out of the previous 5 years prior to the sale. What that means in practice is that if you decide to rent your primary residence, once you've rented it for 3 years, you no longer qualify for the capital gains exemption, and that can be worth a lot of money. Also, don't confuse a capital gains exemption with a 1031 exchange. A 1031 exchange is specifically for investment properties, the sale of one investment property, and then taking those proceeds and purchasing a like-kind investment property to defer the tax payments on the original property. There's some additional questions that you should be asking yourself and thinking about in this situation as well. First, what would you do with the proceeds or equity from the sale of your property? Are you going to use those proceeds for the purchase of a new primary residence that you need? Are you going to use those to significantly improve your lifestyle, like early retirement, or are you going to be reinvesting them? If you're going to be reinvesting them, now you're just making a direct comparison between which investment vehicle is better, real estate or whatever else you're going to put the money into. Also consider whether or not you're going to manage the property yourself, take calls from your tenant, deal with emergencies, or hire a property manager who's going to charge you about 6 to 10% of the monthly rental income for the management. You also need to take full inventory of the costs, both financial and your time and energy, of converting a property into an investment property and renting it. There are things like roof replacement, HVAC replacement, as well as the time it takes to just manage that property and deal with anything that comes up. For more details and more questions you should be asking yourself on this topic, just check out this week's Ask Eli column. Thanks for watching.